All right. Good morning, Rhinos. Let's go, let's go, let's go. Let me shut some of my music off. I was actually listening to some peaceful cello music today, which seems a bit odd because it's like, let's go, right? But what you also have to remember is like I was at the gym at 5 a.m. I was in my office at 6 a.m. I've been so excited. And what's this? Okay. So I don't know where the market is. I believe it's up, right? Because my watch told me that one of our 3 positions were sold this morning. So if y'all remember, I went ahead and purchased, I believe it was Apple weekly expiring 160 calls because they have earnings tomorrow. And it was my belief that Apple is a strong enough company that the market, I hate this chair, that the market was coming to a point where it was an exhausted phase and a bunch of other reasons why we identified, and we meaning me, identified Apple as the best risk reward. So originally I had purchased Apple calls last week for 165s, and they were a bit underwater, and I still own them. I'm going to see the price of everything when we're done talking. Well, actually, while we're talking, but after I'm done, like blah, blah, blah. And they're not sold yet, so I know I still own them. My Etsy position still not sold, so I know I still own it because my watch would tell me because we have the automatic plus 40% get out of it, right? We buy a stock, we buy an option, we put a plus 40% sell order on it. So if it ever hits that, we don't need to worry about it. I don't need to watch the market all day. I don't need to be like, oh my God, am I gonna get that price? No, sold, done, gone. Now I assume Etsy's doing pretty well because one of our Rhinos emailed us this morning and showed that they made 40%. We actually posted that in Rhino Premier. We took out their name and everything because there is a certain level of like, I know who they are, but not everyone needs to know who has what money, right? But that's so cool. I love stuff like that. I love getting emails like, yo, I'm up this much, I'm up this much, I'm up this much, I'm up this much. Okay, cool. Exit 40% on Etsy today. And Robbie's up 40%. Am I the only one that's not up 40% on Etsy? I gotta tell you, like, I love our group so much. Enter Lee. Yeah, good for you, because I was actually down a couple of $100 by the end of the day. I love our group so much. And I love everyone that again, Rhino Premier, which is what it used to be called, it's now Rhino Wealth, has been around for over a year now. So there are many of us that have been a part of this since the beginning. And I can tell you, I believe I have the best performance, right? But I'm not sure. Like there are people in our group that I think have done better than me. Robbie's one of them. Like I know certain people in our group that have taken our research and have formulated to create an opinion that was different than ours. And not different in the sense of I think up and that person thinks down, but different in the sense that I think up to a magnitude of 7 and maybe that person thinks up to a magnitude of 10 and they go ahead and take on that position and it runs, right? So that being said, sometimes I'm in a little early, sometimes I'm in a little late. Apple also entered late of 25% so far. Thank you for entering so early. And sometimes I'm the barometer, right? Like, oh, Ant got in. Well, Ant's usually early to the party, which is actually totally true because I show up on Christmas morning, 7 a.m. And my family's like, Anthony, what are you doing? And I'm like, well, here's donuts and like bagels, right? So I am kind of the barometer because there is 2 different barometers for Anthony. One, Anthony entered. He's always early. Let's give it a day or 2. And the other one, Anthony wants to throw his computer out a window. This is the time to buy. Now, I want to go ahead and take a bit of a serious note and slow it down a little bit because we do have the advantage that most of us have been here together. But there are those that are joining us for the first time today and are joining us for the first time this boot camp. Now, I'm not going to go over everything like I normally would if we were just getting together on a daily basis and some people are new and some people aren't. Because this is an actual boot camp, every day has built on the previous day. Every day is recorded and put up on the YouTube. In fact, we're going to put all 10 days up on our Rhino website. I think we have 4 of them up so far. And in the Rhino Premier page, you can look at the replays, right? So they exist. And the email that I sent out has the replay links in it, right? So I don't need to do all that because in a boot camp, we're here, the market's open, things are happening. The value of time matters. And if I go ahead and spend time on something that doesn't rise to the importance of this time of the day, then I'm doing all a disservice like I'm doing right now because I just spent how long saying that sentence. Anyway, So far, this has worked out pretty perfectly. Now, Monday, we had a down 1,100 point day. Monday, we ended up plus 100 points. And again, every day builds on itself on the next day. So anyone that's joining today is like, oh, hey, duh, it was down 1,100 and was up 100. It doesn't take a rocket scientist to say, okay, that's an up market. Yeah, it's easy to say now. Try being in the moment. Try being live in the moment when things are happening, we're not even knowing what's going on in the market. Can you formulate a calculation, a commentary, an experience level that allows you to compete with the best and greatest minds of the universe in the most competitive field in the world, which is the stock market, while not having the benefit of hindsight, without having the benefit of already telling a story of something that already happens, right? Like how many different shows are there at 5 p.m., 6 p.m., and Jim Cramer comes out and he's like, yeah, well, this happened. And of course you knew to do this. It's like, no, you didn't. Nobody knew to do that because in the moment, nobody knows what the hell to do. So I'm getting a little worked up because I love numbers. I love people. I love talking. If you put all that together, you can be very honest or you can be very dishonest. And when I see people on TV that go ahead and put those together in a very dishonest format, like, yeah. And you know what? I really wish I had the opportunity to be right next to you at 10 o'clock this morning because when I saw that, it was so obvious. I had to do it. And I was like, oh my God, I have to wait till 6 o'clock to tell everyone this. Yeah, that sounds like an honest person. The reality is at 10 a.m., if he really believed that, he would have said it. Everyone has Twitter, Facebook, Instagram, whatever. Okay, going on tangent again. Anyway, so the market was down 1,100 points, ended up plus 100. Okay, so we came out here. Well, first of all, we were out here Monday saying, look, what, and you could even go back to Monday. What does liquidation look like? What does capitulation look like? I even said Monday, everyone, if you don't want to do anything, don't do anything, but make sure you watch the market today because you're going to see something and you're going to learn something that you cannot be taught. You have to see it. And if anyone thinks I'm crazy, you could go rewatch the tape because that was at 10 a.m. If you remember, it wasn't down 1,100 till 12:30. So am I like spooky? Do I have like a crystal ball? No, I'm not 100% right either, but I know what I'm looking at. The market is just behavioral science. It's just people exuding their emotions. It's those that have the courage to go against their emotions, and it's those that have that are coward and only go with their emotions, right? Okay. So then Tuesday comes around. And yesterday started down, I think like 300, 400. And we were live right here. It was down, I think 500. And then it was down like 200. And I said, guys, this is good. Because when you have a big down day, in order for it to be capitulation, you have to have a moment where everyone threw in the towel, right? Now, at that down 1,100 on Monday, you had 9, for every 10 stocks, 9 were down. That is pretty capitulatory. That's 9 out of 10 people saying, I don't even want anything to do with this. Like, throw it away. Okay, fine. The market runs up and ends up positive 100. But is that really capitulatory or is that mostly capitulatory? What else do you need to go ahead and really capitulate people? Well, what about the people that got in at minus 1,100? They thought they were pretty smart. In fact, they made 1,200 points like that. So they think they're really smart. They think like, hey, this stock market thing is easy. I'm good. Let me go ahead. This is such a piece of cake. All you people are losing money. I bought it and look, this market's up great. How do you get that sucker out? Because that sucker or that wise guy or that too cool for school guy has been in the market for like 3 hours and he thinks he's better than everyone. The point is the fact that he's in for only 3 hours, he has no skin in the game. He has no loyalty to the market. If the market goes down, he's going to get out right away. If the market goes up, he's going to keep talking and talking and talking and keep making money until it goes down and then he's going to leave. The point is he's a fair weathered friend. That person that made money from down 1,100 to up 100 is the worst kind of friend. It is the friend that tells you you're pretty when you have money and tells you you're fat when you don't, right? That friend nobody wants. You think the market wants it? No, we need to get those people out. To the final stage of capitulations, get that, I was going to say a bad word, get that person out. So how do you do it, right? So Tuesday morning, the worst thing that could happen if you're looking for a market bottom is the market being up. Because if the market's up, that person's like, yeah, see, I'm so cool. I'm so cool. And then everyone else is like, This market's not giving me an opportunity again. I already missed the move. That guy's talking. He's so cool. I know he's always wrong. I know he's a dirtbag, and I don't want to buy anything that guy bought 1,300 points after he bought it. Like, not doing it. So market participants don't come back in, and the current market participants are all that guy. So how do you get that guy out? That's why if the market started up Tuesday, it's the worst thing in the world. So how do you get that guy out? Because he's a dirtbag. And as you can see, I know those people. I'm actually talking about family members right now, but that's a different story. Anyway, you need the market to start down. That guy is like, uh-oh, the market's down, but I'm still smarter than everyone. Hey, listen, I'm up 1,200 points. The market's down 300, 400. I'm still up. I can withstand this, but he's not talking so much. Now the market's down 800. Now that guy says, oh, everyone was right. I got lucky. I got in minus 1,100. I wrote it up plus 100. Now it's down 800 the next day within a couple of hours. I'm not playing this game. I'm not losing money like everyone else. I'm out. I made a couple of bucks. See you later. Now that guy's out. Now you can run back up. Because also what you did was you gave everyone the opportunity to get back in. Because what did we say yesterday? The one thing we were looking from the market. The one thing. And if anyone's here, you remember it. It would be perfect if this market went down 900 points today, not 1,100, but just enough that it retests that bottom, but enough margin that it's like, no, it couldn't even get all the way down there. People want to get in before that retest, but they see it as a retest. They already trust the retest before the retest. Therefore, down 1,100, down 800, we'll take it. And then the market could end up positive or close to positive. Yesterday, the market was down 800 points. Yesterday, the market ended down minus 60 points. Okay, that's a good thing. Anthony, this is kind of spooky. You are totally on with Monday and you're totally on with Tuesday. Well, you got to play the hot hand, right? Like, do you remember basketball, Reggie Miller, when he starts making threes, it doesn't even matter. Just give him the ball, just heat check. It was like NBA Jam when you made 3 in a row. He's on fire. You just keep shooting because there's something that person is doing right. Even they may not know it. I'm not an egomaniac enough to believe that I know 100% of what's going on. But I know whatever I'm doing right now, I'm in the right area. Therefore, let's continue. Let's stick with what I'm looking to do. So then we said, the reason why we own Apple for Thursday is because IBM came out with earnings Monday. Let's see how the results and let's see how the stock reacts. IBM was up 7 yesterday. That's a good reaction. Microsoft reports Tuesday, yesterday after the bell. Let's see the reaction. Okay. Microsoft reported earnings and got slaughtered. It went down to 270 from, I think it was 292 when it closed, which was down 7 on the day. So let's call it 300, down to 270. That's a problem. In fact, the previous day when the market went down 1,100, the low on Microsoft for that day was 276. Now, remember what we said. You want to retest the lows. If you understand that sentence, you understand implicit it is you don't want to break the low, you want to retest it. Now Microsoft broke the low if it opened up at that 270. That's a problem. If Microsoft would have opened up today under that 276, that was the low Monday. And again, I'm not playing hocus pocus like Anthony, all these numbers, what do they mean to a company? They mean nothing to a company. There's no one in Microsoft that's working their job saying, well, if the stock is this price, I'm going to do this. And if it's this price, I'm going to do this. That doesn't exist. But those that are investors and buyers of the stock all do care about the numbers because that's all they have. They don't know what they're doing in the company. So they use the numbers as their own map. Okay. The low is 276, meaning the entire community of Microsoft believes that 276 is a buy for Microsoft. That was the low. That's when people bought. Those are all facts. If Microsoft goes under 276, the entire investment community says the people at 276 that thought it was a buy are already losing money. They were not correct. We don't know the next line in the sand. We don't know the buy point. We thought we did, but we don't. So let's just sell it all until we find it. Let those other suckers find it. Which means if it opened up under 276, the second largest or the third largest stock in the Nasdaq, which is the index that's getting pummeled, would have opened up at a lower low, which meant the whole market would have came right back down with it because Microsoft is a market leader. It's a monopoly. if a monopoly can't make money, then nobody can, right? So that was very important. So we said, we believed in Microsoft. We believed that they had a moat around them because a monopoly is a good company to bet on. They kind of own everything, and Microsoft is that company. So we said, okay, and this would be quite an insight into Apple, because Apple, we think, is the #1 biggest, best company in the entire world. So if IBM's up 7, and if Microsoft can have good earnings, then Apple is like a shoo-in. People are going to wake up and say, whoa, if that's all happening, then Apple's going to kick butt, right? So when Microsoft was down to 270, I looked at the stock and I was like, well, that's a problem. And I realized that it was only down on the numbers. They didn't get on the conference call yet. And the thing is, with a very skittish market, everything tells you something, right? People shop first immediately. They said the numbers aren't as good as we want. Sell, 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 because the market's been selling. But what changed? The conference call came out and Microsoft said, yeah, we see the future just as bright as we always did. In fact, we believe that we're relatively insulated from, all the sensitivities that are going on in the market. Also known as, we know we're a monopoly. We can do whatever we want to do. And if y'all don't know that by now, you better ask somebody. Now, I'm sure they didn't say it like that, but I'm kind of feeling like a little Tupac this morning, right? So I'll tell you something about Anthony. Anthony comes to work listening to Dave Matthews Band. So Anthony comes to work like, la, 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 everything's okay. Every now and then, Anthony wants to put on Tupac, where it's like, F this, F that, blah, 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 where he just wants to come out and say, go ahead and say it to my face. I did not listen to Tupac this morning, but I'm kind of feeling it. Like, I'm kind of feeling a little bit like, you know what? Let's just get this going. But that's all, and I share that because that's a warning flag. When you're doing so well, you then have a feeling of omnipotence, where you think you're bigger than the market. You are never bigger than the market. So I'm actually quite partial to just maybe selling my stuff and getting out of it, because I see myself right now. I see that I'm like, yeah, I'm so cool, right? But that's a red flag. So that's just a little bit of teaching about yourself, right? And I'm sharing it with you through my research about my experience with me. Anyway, so Microsoft comes out on the conference call and they say everything's great, it's cool. The stock starts ticking up. This morning, the stock was up 5% before the market opened, 4%, 5%. Microsoft is a really big company. It's like the 3rd biggest company in the entire world. Therefore, it pulls everything up with it. But more so than that, what did we see? We saw, for the first time, a company that had bad earnings or not as great earnings get slaughtered and then brought back. And not only brought back, but brought back in a big way. So if you go ahead and take a look at the market, it was down 1,100, came up. Down 800, retested it, came up. Microsoft was down, retested it, came up. You now have an investable base, because those 3 things alone tell you there is money looking to come into the market, and for all the reasons that we shared yesterday. See, you can have your technical aspects and your fundamental aspects, and people that are only fundamentalists are worthless. People that are only technicians are worthless, because if you don't know the other side, you don't know anything. It's like people that are Republican that have no idea what Democrats are talking about. That person's worthless. And more so in the Democratic Party, because for whatever reason, their bodies like start sizzling. It's like if you ever imagine the devil walking into church and putting his finger in holy water. That's what Democrats do when they hear anything about Republicans. At least Republicans, and this is a broader statement, right? But I feel like Republicans understand, they just disagree with Democrats. Democrats, I don't even think understand what Republicans are saying. They're just like, yo, those people are like the worst people. Anyway, the point being, any one party that doesn't understand the other party is worthless. Their opinion's worthless, because you need to know both sides to then form a cohesive opinion. So when we're sharing our fundamental analysis, talking about macro all the way down from public sector to private sector to stocks to bonds to real estate and which one you want to be in, that's because we need to know where the circus is. We need to know where the money flow is going. Because when you know where the money flow is going, you know where the opportunity is, where the opportunity is versus where the suckers are, right? For instance, if there's an asset, like say there's a car, right? Like, so you're selling a Ferrari. No, someone else saw a Ferrari. She would never do this. And they went ahead and took the engine out, right? And the Ferrari they were selling for 100,000 and no one's buying it. And it's 90,000, no one's buying it. It's 80,000, no one's buying it. It's 70,000, no one's buying it. You would look at yourself and say, wow, that Ferrari's worth 100,000. It's going for 70. Why? Because if that Ferrari is the Ferrari that I know it is, well, it's worth 100,000. Therefore, I could buy it here because I have the money, I could buy it. Or let me go take a look under the hood. The engine been taken out. That's not really worth 70,000. What's actually worth 40 or 50,000. That's what the market's doing right now. But the only deciding factor in where the engine is the money flow, because the money flow tells you where the money wants to be long term. So if you can identify where that money flow is, you can say, oh, this sector is going down, but that's where the money flow is going. Then I already know that if I get in and it continues to go down, they're eventually going to come in and bring it up. Or if I get in before they do, they're going to be rushing to it. Or if I get in after them, it's going to go up a lot. It's going to go up in front of my face, right? So you need to know where the money flow is. That's fundamental. The technical aspect is you need to know what the market reactions are. When you see a market go down 1,100, you then know that even though it ended up positive, you're going to have a lot of people excited about it, but it's not capitulation yet. You need to retest those lows or get close to it. Therefore, if you, like for instance, you remember we bought Friday, but we didn't buy all of it. And then we bought Monday, but we didn't buy all of it. And then we bought Tuesday because the belief was, A, you're never going to get the bottom. You're never going to get the top on any consistent level. And understand that you might be wrong some days, so buy in increments. But more so than that, if you're able to go ahead and identify this is the market and this is the reaction that we're looking for, this is the reaction it should have for us to be right, then you can play along the whole way. Because if we only bought Friday, we'd be, I guess we would feel relief today. Like, oh my God, yes, the market's up. I'm not down so much. But the fact that we bought Monday and Tuesday, we already have a position that got sold for 40%. And I imagine the other ones are probably doing good. I hope so, right? Like we're going to take a look. So what do we believe today? So before we take a look at the market, let's just talk about what it is that we're looking for. So we haven't had a day yet where the market opened up. And the scary part about that is there is a potential that this, and again, the market's been open for almost an hour. So I'm saying something, and please don't spoil it, right? Like don't tell me what's going on. There's a possibility that I'm talking and a market's down 1,000, right? Like I have no idea. But the market hasn't opened up yet. And the belief is, now let's put our behavioral science hats on, right? If we've seen a market getting pummeled every single day, then one would say, all right, the next time that market's up, I'm going to jump in and short it too, because it's the opposite of buying a stock, right? Like say you like a stock and it goes down every day. Well, no, say you like a stock and it's going up every day. The first day it goes down, you're like, okay, great, I have an opportunity to get in, and you buy it and it goes up. The reverse of that is shorting. A market that goes down every day, you're like, oh my God, it's going down, free money. Oh, I just can't wait for the day that it starts up so I can short it right there. This is that day. So that's what conflicts with the Monday and Tuesday price action. You had the down 1,100, you had the retest of 800, but now you're coming into the next test of the market, the day that the market starts up, because one would believe people are going to come in and start shorting this market. The test is, are they going to be correct? Because here's the thing. If this market started up 400 or 500, wherever it started up, and it came down to plus 100, plus 50, God forbid it went negative, okay, that's not a reason to panic. That's supposed to happen. It doesn't have to happen, but it's natural that it did happen. If that were to happen, then it's what happens the rest of the day. Does the market go up from there? Does it regroup and go forward? Or does it crumble and everyone that shorted it was correct? They finally had their opportunity and they're pushing the market down. That, along with we need to talk about the Fed. This is like the biggest announcement anybody's been waiting for. It comes out, I believe, at 2 o'clock and 2:30. There's a Q&A with Fed Chairman Jerome Powell, which means from 2 o'clock to 4, well, from 2 o'clock to 3 o'clock, definitely. Because here's the thing. All that Q&A, all the big banks get the Q&A before it happens. It's like the most, they all have it. So whatever price action happens between 2 and 3 is the day. That's going to be the most volatile hour today. This market's going to end up like 700, 800, 1,000 points, or it could be down 1,000 points today. So you have to ask yourself, all right, if I have options, do I want to risk owning them in that atmosphere? Now, we've shared a lot of good things, and it is my personal belief that this market is resilient and it's ready to go, because it is my personal belief. And this is, you will not find a single person that shares this belief. This is solely Anthony, that they will not raise rates in my lifetime, that the bond market will raise rates on the government. What do I mean by that? So you can raise rates one of two ways. Either the Federal Reserve comes out and raises the rates, like manually, hey guys, our Fed funds rate 0, it's now 25 because we just raised it 0.25 points. Or the bond market says, we are not buying your bonds anymore at this rate because we think you're dirtbags. We don't think you can pay us back. We think inflation, blah, blah, blah. So we're going to sell the bond. In which case, when you sell the bond, the person that has the bonds has to offer a higher rate of return to go ahead and sell that bond, to continue borrowing money. They have to raise the rates to go ahead and entice buyers. If nobody would buy a bond at 1% and the government still wants to borrow money, they have to now make a bond 1.1% or 1.2% to entice buyers. So that's the other way rates rise. That's fully in the bond market's control. That's called what everyone's fearful of, the bond vigilantes. When they just go off script and say, you know what? And this is another Tupac thing. F you and the click you claim, bond market, we ride, we come equipped to a game. Now I'm paraphrasing. I don't think Tupac talked about the bond market, but that's what he would have said, right? So that's the longer term thing. So because this country owes $30 trillion, this country pays the interest rate on that 30 trillion based on that 0% rate. This country has its own problems going on. Think about this country right now. This is during the best of times. We have money everywhere. We have unemployment super low. Everyone can get a job, blah, 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 blah. This is the best of times right now. And think about how many problems we have. Do you know what would happen if all of a sudden the government had to cut back public spending by 100 billion or 200 billion because they raised the rates on themselves? Okay, everyone, I know you're gonna retire at 65, but now it's 70. Yeah, I know we said we were gonna give you this, but we can't. Oh yeah, remember we talked about that like free healthcare thing and the free child like school thing? We can't anymore because we have to pay that money to China because we raised rates on ourselves, but don't worry, we combated inflation. That will never happen. And on top of that, if they did that, they would be the populace would lose their minds, first of all. Like the people would not be okay with that. But second of all, if you have 30 trillion in bonds and these people see you raising rates, what happens to the value of their bonds? Remember, bonds are priced the bond price is inverse to the rates. So for instance, if I bought your garbage, United States of America, you sold me these bonds, I bought them. All right. So now I own 100 billion of United States bonds at 1% or 1.75%. Doesn't matter. It's an example. I own, let's just use the right one, 1.75%. All right. So they're worth $100. They're worth par. $100 for 1.75%. Okay, cool. Now the United States government raises rates. Whoa. United States government, you are the biggest dirtbags. Your inflation rate is 7%. You owe more money than you can ever pay back. And I was the jerk that lent you money because I believed you when you said you weren't going to raise rates. And then you raised rates. So all of my bonds just went down in value. I just lost 10 to 20% of my money by lending you money. Take this. And I sell all the bonds because now I can no longer trust you. If you're going to raise rates, you're going to continually decrease the value of my portfolio because I'm going to lose money on bonds because all the new bonds are worth more than my bonds because they're issuing a higher yield. I'm going to sell all the bonds. And I'm going to be real pissed about it too. Well, guess what? I don't own 100 billion in bonds. You know who owns like $1 trillion in bonds? China. Do you know pension funds? Do you know government sovereign funds all own trillions of bonds? Do you know what would happen if the government raised rates? They would be livid. They would sell those bonds so quick. And you know what happens when everyone is trying to sell the same thing at once? It crashes in price. And when bonds crash in price, the yield spikes. Because again, bond price and yield is inverse. that yield is a real yield. The government pays its debt based on that yield. So therefore, if that yield is spiking, the government owes more money. The government cannot pay bonds if the bond price is going up. Basically, the US government is on an adjustable fixed mortgage. They have an option mortgage. When those rates go up, they have to pay more. Does everyone remember how that worked for people in 2007, 2008? Why do bonds drop when rates go up? Because price and rate is inverse. For instance, Don, if you own a 1% bond, right? 1%, your bond gives you 1%. And then all of a sudden rates go up. Well, now all the new bonds that have to be competitive with current market rates have to issue a higher rate. Therefore, the new bonds will issue 1.25%. Now, which bond's worth more? The new bonds at 1.25% or your bond at 1%? The new bond's worth more, which means your bonds went down in value because bonds are priced at par. They're priced at $100. So any interest rates that rise means new bonds are going to be issued with a higher rate, which means existing bonds go down in value because their rate is inferior to the new rates. Don't the lower rates ultimately discourage savings by encouraging borrowing? Don't lower rates simply encourage additional? Yes. If you can borrow at a lower rate, why would you save? If you could borrow at a lower rate, you take that money and conceivably you do something with it, right? So when the Federal Reserve lowers rates, what they're trying to do is stimulate the economy. They're trying to say, hey guys, listen, come over here, borrow money from us. And essentially they're saying it to the banks because the banks are the ones that go to the Federal Reserve window. But when the banks go there, the assumption is then the banks are in the business of profit. So they're going to take those loans and find good opportunities to lend it out. The more money that goes to the banks, the more opportunities they have to go ahead and find. Therefore, it funnels down to the real economy and small businesses get these loans. That's the way it's supposed to work, right? So when they lower rates, it's to stimulate the economy. When they raise rates, it's to cool the economy down. That the economy is overheating, and that's measured by the velocity of money, how quickly money is changing hands. And the velocity of money equals inflation because the more quickly the money is changing hands means that there's more money in the economy, which means there's more money supply versus goods and services. Whew, that felt good. I missed those days where I was able to go ahead and actually in a college setting, right? So anyway, so those are those things. Therefore, the people that own bonds are basically on the phone with the US saying, if you go ahead and raise those rates and you destroy my whole bonds portfolio, and we go ahead and lose billions and trillions of dollars because our bonds are now worthless, because you're now combating inflation, we'll go ahead and make your life miserable. So you better figure something out. Click. So you know what the government does? You know what the Fed does? All right, guys, listen. All right, call back Xi Jinping, whatever his stupid name is. And that's not me saying it. I'm being funny. Don't get crazy, right? Because it's Joe Biden. What does he know? Yeah, all right, listen, buddy. Hey, come on, hey. This is what we're going to do. We're going to talk about the rate rise. We're going to talk about it. And in talking about it, we're going to pretty much try to crash our market. Because if we could crash our market and remove the excess speculation, then we can lower our inflation because we can decrease the wealth of people. People will have less money in our country. Yeah, I'm telling you this because, I'm your buddy. So what you should do is start selling your stuff now and then start buying it back because we're not really going to raise rates. And then the market's going to fly because I need to get reelected. It's 2022, there's midterms, and I can't let that Donald Trump guy come in here. And the people on the phone are like, oh, God, no, we can't take advantage of Trump. But you, Joe Biden, we could kick you in the face and tell you you're a little girl, right? So that's okay. All right, so we agree? Yeah, cool. All right, that's the way that call goes. So in talking about raising rates, in talking about raising the rates, you then bring the economy down. You bring the stock market down because you remove all the excesses out of it. Because companies that are dependent on low rates, like all these new tech companies that we flooded the market with, have to continue borrowing. They're a technology that's a great technology, but they're not profitable. They have to borrow money to continue financing their endeavors. If the money that they're borrowing is more scarce, it doesn't exist, and it costs more money, then that company may never come to fruition. Therefore, the value that company actually is less than it would have been if the money was free. Okay, so you bring down everything and all the people that own Bitcoin, you just crush everyone. Everyone lost about half their money in their account, except for us, and except for you, because we're kind of smart. We see this happening. But what does that mean going forward? How long can you suppress that coiled spring? Well, it's our contention that that time is up. You saw Monday, you saw Tuesday, you saw IBM, you saw Microsoft. Now the big test is today. Because today you have the Federal Reserve coming out. Now, because it is 100% believed, and I'm not kidding, there's a thing called Fed Funds futures. That's how people trade on what their belief is. It is 100% that they are raising rates in March. That's baked into the market. It is, I believe, 80% that we might get 5 rate hikes this year. So the market believes we are getting rate hikes. Now, when something is 100%, what direction can it go? The only direction there's 2 directions, right? You could go sideways or you could go down. Meaning, if our contention is correct, then the 100% belief that the market's going to raise rates is going to come down to maybe 90%, to maybe 85%. But the fact that it's no longer 100% allows the animal spirits of the market then to take off again, because the belief is, wait a second, they're not going to raise rates? Holy sh! All right, everyone, money back in, before money back in, money. And that's how there's a thing called panic selling. We know what that is. It's kind of like a sore loser, right? In a sense of what's the opposite, a sore winner. No one actually knows what that is because who's a sore winner. There's also a thing called panic buying, where people and hedge funds and pension funds that need to chase performance say, guys, I don't really give an SHIT what you buy, just buy something, because if they're not raising rates, this market's going to fly and we need to be in. And then Japan and all the rest are like, yo, they were always lying about that rate rise. Now's the time to get in. It is our belief that this market's going to look pretty good the rest of the year. Now, I kind of told the story that it's going to be like up 100%. I don't know if that's the case, but I do believe it's going to be up, and I believe it'll be up pretty well, right? Because who in their right mind would want to give money to the government? You wouldn't. So you want to give money to the private sector. And in the United States of America, we have the strongest currency in the world, with the strongest companies in the world, with the best balance sheets in the world. In fact, every company, Apple could be their own country. Microsoft could be their own country. Google could be their own country. In fact, you could break up Google and YouTube could be their own country. That's why my money will always stay right here for now. What does everyone else think? They're not stupid. They know that too. They're looking for opportunities to get in. So if you're, like, for instance, if you and I were talking, I don't know, a month ago when the market's hitting new highs, and I said to you, hey, Mr. Jones, do you want to buy stock? You might say, hey, Ant, not at these levels. It's like all-time highs. It's like really high. All right, Mr. Jones, would you buy stock if it was 10% lower, if you got a pullback? Well, yeah, of course I would. This thing is like, oh, and Anthony, I would definitely jump in there. I don't know why I do that. A lot of my clients were Midwesterners, and they are the greatest salt of the earth people. When you talk to someone from the Midwest, they don't buy any of your bullshit. They just buy you. Yeah, and you know what? I saw the chicken and it crowed twice before 12 o'clock, and I knew eggs were coming. And I don't even know if that's a real sentence, but it makes me feel like I want to hug that guy. But anyway, they would say, oh yeah, 10%, I'll buy it at 10%. But would you? In the moment it's at 10%, that's the maximum pain. That's when your stomach wants to come out of its body. It's where you want to take your computer and throw it out a window. It's where everyone on TV and the radio is saying that the sky is falling, everything's done, rates are going up, Joe Biden's going to war. Because what does it take to bring the market down 10%? A lot of bad news. You have to really scare people. And when you're really scared, do you want to buy stuff? In fact, take a look at the videos this week. I said 1,000 times, guys, I know this is scary. And I'm not telling anyone to do anything. But for those that go ahead and take advantage of this opportunity, you will be grateful that you did. Now, some people did, some people didn't. And that's their decision. This is a free platform. I don't even earn like anything off it. I just like making sure that I'm a part of the solution, that I can go ahead and help educate people with my experience, right? And it's fun. I'm making money too, right? Like, why not? Which has always been my contention with stock market platforms. Why does a stock market platform charge anyone? If they're so smart, couldn't they make it with their own money? No. Which means the stocks are not the sales, you're the sales. That's where they're making their money, off of you. Anyway, so there's one of 2 things that's going to happen today with the Federal Reserve. If they were truly on this mission to go ahead and tank the market, they would come out and say some nonsense like, yeah, we already got set in our heads and blah, blah, blah. We're going to do this. It's happening, totally happening. Don't even worry about it. Call your mama. Tell her you won't be home for dinner. If they do that, the market will go down. But then again, how much will it go down? Because we already have it 100% priced in. In fact, you can make the argument that even if they did do that, the market's already told you that it already priced it in. In fact, I would believe in that scenario, the worst case scenario is the market comes down to kind of where it was Monday and Tuesday and bounces back and does another retest. So I could maybe retest that 800. That I honestly believe is the worst case scenario. Now, granted, things could change. The market could be down 1,000 right now, and I look like a complete fool. Like, I have no idea. I know my watch hasn't vibrated anymore, so my other positions haven't been sold, which means conceivably they're not at the 40% or they came, I don't know, right? And we're going to look together. And by together, I mean, like, I'm finally going to be able to see. Conversely, the Fed could come out and say something because they do have integrity. And I do think they're dirtbags. But the Fed Reserve is going to be around and has been around longer than any individual that's been in it, right? So they do have a bit of a reputation. They need to have a reputation. They need to have a resume. So the Fed can't be so egregiously wrong because then people just don't believe them in the future. And the power of the Fed is that everyone believes them. So they can be a little wrong. Like, I think Tom Brady's going to win by 20. And all of a sudden, everyone bets him to win by 20 and he only wins by 5. Was I really wrong? Or was I just like, should you have not been greedy and just bet Tom Brady to win, right? Exactly, transitionary inflation. Well, it's transitory, it's transitory, it's transitory. Oh, well, you know what, was it? We said there was inflation, but, we're not perfect. So the belief is if they were not going to raise rates, and they know they're not going to raise rates, like this isn't something that they're like, what do we do? They know they're not allowed to raise rates. So if they know that they're not going to raise rates in March, but the market believes they can raise rates 100%, that's like a big dichotomy. Like they need to do something to lower, to minimize that gap. So I suspect they're going to say something to the effect of, our eyes really on inflation, and we believe that inflation was up 7% last year because the comps, which actually, and it's kind of interesting that no one mentions this, inflation rate is year over year. The 7% inflation last year is all year over year of 2020. Everything collapsed in 2020. Every price came down as low as it could. There was no supply chain. There was no nothing. Everything collapsed. Therefore, for prices to be higher in 2021 than 2020, yeah, that's inflation. But I understand the transitory argument. What they were trying to make was, guys, the economy recovered. People came back out. Everyone had all this money in their accounts. They wanted to buy stuff and it wasn't theirs, so they paid more. If that's the case, well then, if they paid that much last year over the year before, then that rate of growth, 7%, is quite high. For us to be 7% again, we have to be 7% over that 7%. We have to be 7% of last year, meaning we can have a negative inflation rate this year and still be a higher inflation than 2020. Because the comparisons are year over year. They're not 2 years over 2 years, not 3 years over 3 years. So theoretically, we can have a negative inflation rate this year by simply doing nothing. If the economy, if nothing changes, we have a 0% inflation rate, right? Right. If things go down by just a bit, like, okay, everything was up a lot in 2021 because of supply chain, but now we got a hint on the supply chain, so things aren't up as much. And all that employment, remember, all the big, hey, Deborah, remember last year, all the big boosts to employment, like salaries and hourly wages already happened. They factored into the numbers. Do we think employees are going to be paid 7% more this year than we did last year to get them to come into a job? I don't think so. Do we believe that airfare and cruise lines and T-shirts and cars are going to be 7% more this year than last year? I don't think so. And I think the decrease in the stock market and decrease in the money, like we sucked a lot of money out of the stock market. We sucked out a lot of speculation by the market coming down as much as it did. I mean, their stock's down like 70%. The Nasdaq as a whole was down 16%. 20% equals a market crash. Like it was 4% from an actual crash. Because the crash doesn't have to happen in one day. If something goes down 20%, a whole index, that's pretty much crash territory. So I kind of don't think inflation is going to be a thing this year. Because you remember, inflation is the money that comes from, okay, inflation is the increased money supply versus goods and services. So we have inflation. We know that because the money supply has increased, right? That's by definition. The effect of inflation is increase in prices. The only way you can have an increase in prices if that money comes through from the banking sector to Main Street, if it comes from Wall Street to Main Street. The banks get the money because the banks use the money to go ahead and buy the bonds. The government goes ahead and creates new money out of thin air, lends it to the banks at zero. The banks take that new free money, lend it back to the government by buying the bonds, which keeps the bond yield low, and it's just a circle. So as long as that money never enters the real economy, inflation doesn't go up because it's all confined to one spot. The reason why inflation went up last year, other than the supply chain and stuff, was because the money did come into the economy. Enhanced unemployment, PPP, all of that stuff. So if there's no more enhanced unemployment this year, if there's no more government stimulus packages that are just giving people free money, and I don't mean that derogatory, like people deserved the money last year, but I mean free money, like it's just coming to people. If these things don't exist and the supply chain just naturally evolves 1 year more, and all the speculation came out of the market because all the prices crashed, can you conceivably make an argument that there won't be inflation this year? I think you can. I think I would actually say inflation is going to be down this year. And if inflation's down this year, there's no reason to raise rates because the inflation is going to take care of itself. So not only do I think they're not going to raise rates for every reason that has to do with macroeconomics and bankrupting an entire country, not only do I think they're not going to raise rates because other countries would go ahead and take Biden and string them up and everyone would be like, well, that's kind of cool, like good for you. But I don't think they're going to raise rates because I just actually don't think there's a need to. I don't think inflation's a problem. So if you have all three of those things, but yet the market believes 100%, and the next meeting's not till March, where this rate thing is supposed to happen, the last time the Fed is going to speak to the markets is today. So it's my belief that I think the Fed is going to kind of dog whistle a little bit, that they're still considering, it's not done fact. And any little thing that's short of 100% guarantee, because that's where we're at, 100% guarantee, the market will fly. And if that's the case, the market will end up, oh, okay. What do we have after the market today? We have Tesla. Tesla reports earnings. Now, Tesla's a company that is the coup de grace. It is the poster boy for future growth. In fact, when rates rise, Tesla is the stock that should be annihilated because Tesla doesn't even make money. Yeah, they're profitable because they get tax credits from the government for carbon emissions. Without those, they're not profitable. But Tesla's going to fly people to the moon. Tesla's going to create, they are a super innovative, if you can dream it, you can achieve it company. They are the poster child of needing low rates. Therefore, but at the same time, they are the poster child of animal spirits. People love Elon Musk. People love everything about Tesla. People want to own Tesla for their entire lives. People want to own Tesla so they can give it to their children who can give it to their grandchildren. They want to own Tesla so they can take a stock certificate, put it on their wall and say, when I was your age, Sonny, I was there. That's Tesla to people. If Tesla reports a number and that stock goes up and the market ended up because the Fed, kind of said what we want them to say, then tomorrow you're coming into an all clear sign. Because remember, the market was higher today. It would have got sold off at some point. You had the double bottoms Monday and Tuesday. You had the reactions of Microsoft and IBM. You have the Fed Reserve getting out of the way. You have the poster child for excessive speculation and rates and all the rest reporting after tonight. Tomorrow, if all of that lines up, it is all clear. I can say without a shadow of a doubt, just short of the word guarantee, that is the bottom. Buy anything you want. Now, and we only have 11 minutes left. Now, the reason I share all that with you is twofold. One, if we're correct, it wasn't by accident. But secondly, and more importantly, because me patting myself on the back does no good for anyone, right? It's like if you ever meet someone that says they never made a mistake, they're the most dangerous people. Because either they're lying to your face or they don't know what a mistake is, and therefore that mistake's going to blow them up. And do you want to learn? Do you want to be in bed with someone who just learned what a mistake is? No, you don't, right? So I shared this with you because if we're right, it wasn't a mistake. It wasn't by accident. But if we're incorrect, we're going to know where we're incorrect. We just laid out such a bop, 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 that if we're incorrect, we're going to be able to identify which part we were incorrect. And presumably, we can then identify it, correct it, and create a new outcome. And anyone that's a part of Rhino, which is a 2 o'clock meeting today that I'm actually hosting again, can't wait. V's been amazing, but I miss my Rhinos so much. Understand that our company, we go ahead and outline projections for the next 102, 104 weeks, week by week, with 10 lines of different metrics, all calculated with each other. If we're successful, it's because we made sure every point of the day that we knew what we were doing. If we're not successful, we know exactly where we didn't have the success and we change it. All right, so let's get into it. I gotta tell you, I'm actually scared. I don't want to look at the stock market because, like, here we are. And that's what's beautiful about what we do. This is the most honest platform you could ever be a part of. I have no clue what's going on. I could open this up and look like a complete fool. So here we go. All right, so let's do a share screen. All right, let's pull this up. Where are we? Whew, okay. So what we can see, all right. So what we can see with the market is now it's up 154. Now we're gonna go back to the tape and see what it opened up and blah, blah, blah. But I think this is less than what it was. And in fact, I'm looking at Etsy, and now Etsy just went negative. Apple's at 161. A lot of companies are doing givebacks. And that really bothers me because this was probably up a lot before. How did I not get out of this thing? That's so obnoxious. Anyway, 21 red and green, I'll take it all day. Okay, so let's take a look at the QQQ. Okay. Oh, red, no green. That's kind of concerning. That means the money flow is slowing down a little bit. All right. So what we see here is the price is moving up. Okay, so price is moving up and volume. All right, let's do so unfortunately, this whole day is not done yet. So let's do, all right, so it's already been an hour in the day. Actually, it's almost a half hour. I mean, almost an hour and a half. So let's do half-hour bars and see what it comes up with. Okay. So what we can see is the market was coming down here, volume was coming down, volatility was going up, right? That is a good position to be in because when price is coming down, but volume's coming down and volatility is going up, it means people are scared and something's about to happen. So don't get in the way of it. But it does tell you that, well, the price is coming down and not that many people are selling it anymore, but why are people getting nervous? They're not buying it. They believe something is about to happen. Okay, cool. And something did happen. And again, I don't know what the outcome of this is going to be. I know that I'm not happy where stocks are right now because I probably could have sold them earlier, but that's okay. So right here, we see price coming down. Now, I'm gonna get out of here. We see price coming down and what's going on with volume. We could say that's fairly sideways, right? Okay. And what's going on with volatility? Well, we could say it's fairly sideways. I know what you're thinking. Anthony, don't be lazy. This is up. This is down, right? Okay. So price down, volume down, volatility up. Again, that's ugly, but when volatility is going up and price and volume are going down, it's one of two things. It's either predicting something bad is going to happen, or the bad thing already did happen and now it's just extra. Or like there's people that are always worriers. They're always just in that corner worrying, right? Okay, eventually they're going to be right at some point, but they're not always going to be right. In fact, when they're not right, it offers you an opportunity. So what we can say here is the market's down, the volume's down, but they're still worrying. I mean, how much more is there to worry about? Okay, we understand. The peak of their worry is the low of the market, so they were right. Okay, cool. So they were right to worry that whole way through. All right, now all of a sudden you have a market that's going up. Okay, cool. And you have volume that's going up. Cool. And you have volatility that's going down. Cool. That's Goldilocks. Market up, volatility down. Perfect. Okay. So what happens then? Now it looks like it's going sideways. All right. Well, let's say it's going down over here, right? Okay. What's going on with the volume? It's going down. The sellers there's just less sellers. They're not there anymore. Okay. What's going on with volatility? It's going down, which means that's the opportunity. The market's going down. There's less people selling, but they're less volatile, which means, hey, listen, there's something happening. There's something a brewing. There's an opportunity here. Okay, and here it is. So let's see. Market is going up. Volume is going up, right? Yeah. And volatility is going down. That's a good thing. Okay. So market came down. This is where it closed yesterday. I guess it gave back a lot. And there was high volume. Now the market looks like it's going up, but it's not going up on much volume right now. But volatility is sideways. Now here's the thing, it's a bit of a holding pattern because what do we have in front of us? We have the Federal Reserve at 2 o'clock. They're kind of a big deal. They're like the biggest thing. Everyone's waiting for them. So you would presume that things are just going to be in a holding pattern. They're going to sit sideways. It is our belief that it's going to work out to be quite good, like it's going to work out well. But the market's saying, hey, listen, we're just going to kind of chill. Why don't you show me something, right? So we'll let it do its thing. Let's take a look at an hour. Actually, let's look at a 45-minute bar. I clean this up a little bit. I'm looking at a 4-hour bar. I wish there was like you could just highlight all of them and just delete it with one delete. I have a chat. Why do you evaluate the QQQ instead of directly on the Nasdaq? Because the QQQ has volume. It's a tradable asset. It's a ETF, exchange traded fund. So it gives me volume. The Nasdaq is just an index. You cannot trade the Nasdaq, so you don't have volume with that. Therefore, the volume is a third of what our components are, price, volume, volatility. So we always want to trade the ETF versions of these indexes so that we have volume. So this is a 4-hour chart. Now, what we can see, if we look a little bit more macro, a little bit more broad, down, stock, up, volume, up, volatility, all bad, right? Okay, what's on the other side? Up, stock, but this is a problem. Down, price, and volatility is down. So what this would tell me is that a lot of people just don't believe it yet, I guess, right? Like the volatility is going down, so they're not fearful. Do you most of the time use leverage 10 when buying? I just use options, and options innately have a lot of leverage because you're betting on a particular stock to be a particular price by a particular date. If you don't do options and you want to just do leveraged purchases, there are ETFs. Direxion offers 2 times and 3 times ETFs. So those give you a lot of bang for your buck as well. But me doing options is in itself the leverage. So what do I think? I don't like that this isn't red. I don't like that this isn't green. I don't know. I would say the next spike up, I'm going to sell. I do see an all clear sign, but again, it just looks like maybe it wants to come in a little bit more before it runs. And the fact that we have options that expire this week, that's a problem because we don't have the luxury of waiting a day or two. Every moment is very important to us right now. So we're going to watch. We'll see what happens. We're going to leave it alone because we believe, but actually maybe we'll lower our 40% to 30%, just so that if the stock does move, we'll get out of it. But yeah, that's that. So you have my complete thesis on what we believe is going to happen. I really would, and again, we call this, right? And now the stock market's really given back a lot. You see the Nasdaq getting towards the lows of the day. And that's people saying, all right, see, the market was up. Now I have my opportunity to short. So don't kid yourself. There is a real fight going on in the stock market right now. Today is a battle. The winner is going to be the person at the end of the day. And that's what I believe this is telling you. Again, it's my interpretation, but people aren't fearful, but they're watching. They're not fearful because the volatility is things aren't moving crazily anymore. They're already bottomed. Everyone believes there's a bottom. And not only that they believe it's a bottom, but it's an investable bottom because I can buy anything I want here and just say if it goes lower than this, sell me. So I know my risk parameters. And when you know your risk, you're not volatile anymore. You can measure it. All right, this is my risk. This is how I hedge it. This is my reward, blah, blah, blah. But this is telling you there's a lot of people waiting. They want to see what happens with this Fed. So let's see, right? Like today's that day. Let's do it. So tomorrow's going to be a really, really fun call that we're going to have together. So for now, everyone, peace, love. If I do anything that's outside of those 40%, I'll let you know. I'm going to take a look at the account now. I really wish I sold everything before because obviously it's down from there. But again, if I rewind my own tape, I would have known we're going to sell off and then they'll all clear. We've been right so far, so why am I going to be afraid now? So let's see what happens. But all right, cool. Love everyone. Be on 2 o'clock, please. Big. So Rhino, we're going to debut our prototype of Rhino Search. We're going to share a bit of marketing around it. And we're going to share our calendar going forward. Rhino coin is a big deal. We're going to offer some more coin today because next month it does go up in price. So a lot of cool stuff. So be on at 2 o'clock. All right, guys. Love everyone. Bye.